Hey guys, welcome to another trading analytics video. I'm Trade Runner, and today we're going to be taking a look at CPI expectations for next week and what it means for the market going forward. But before we get into that, if you haven't already, hit that red subscribe button and click the notification bell if you enjoy this type of content. It really helps the channel out. Now let's get to the video, guys. So the big thing that everybody's waiting for heading into next week is actually the release of the CPI data on Tuesday, February 14th. And that's to get an idea of how inflation is affecting the total U.S. economy. Now, the Fed itself has actually been very hawkish on its news and how it turns to combat inflation, because Fed Chair Jerome Powell's main goal is to strike down inflation by any way possible. So he doesn't really care about how the markets perform overall if his overall goal of getting inflation to drop is achieved. Now, taking a look at what the current expectation for CPI, and right now the expectation is 0.4% month over month inflation, which translates to about a yearly inflation of about 6%, which is significantly higher than what the target goal of inflation is, which is usually 2 to 2.5% annually. So taking that into account, it looks like we have a lot of bearish sentiment on CPI data. Now, what does that mean for the markets going forward? Well, first and foremost, it means that disinflation is not happening as fast as the Fed would prefer it to be going on. In fact, prices actually jumped 2.5% versus this time last year, mainly due to things such as used car prices jumping up over the last month or two, and how that affects the total CPI, because things that are factored into CPI data is, housing costs, the cost of living, consumer goods like used cars, grocery prices, things of that nature, things that consumers spend on the day-to-day. And seeing that growth of 2.5% of prices, that, usually is not a good sign for inflationary numbers, because it's showing that the cost of living in the country at this point in time is significantly higher than it was a year ago at the same time. So we're having the inflation numbers that are coming in, which again, with a 0.4% month over month, it translates to about a 6% annual inflation rate. That's actually a very hot inflation reading. And, that usually doesn't bode well, but that just means the Fed is most likely going to be very prudent in raising the interest rates that they've, with these interest rate hikes that they've been doing over the last few months, in an effort to drive inflation down to reach those target numbers of about 2%. Now, what does that mean for the market as a whole? Now, generally speaking, the stock market reacts very negatively to news that inflation, interest rates are going to be raised to combat inflation, just because with higher interest rates, that means less consumer spending, and less consumer spending means less money being pumped into the markets, less money being pumped into the markets. It's all a cyclical thing, right? But over the last month or so, we've had a weird inverse reading. So whenever there's relatively negative news in the Fed, the market's actually rebounded very well. And a lot of that has to do with the overall investor sentiment, seeing that while Jerome Powell, who's the Fed chair who speaks, at the Federal Market Committee's meetings every week, every month, that even though he's very hawkish on inflation currently, overall the sentiment is that inflation is starting to go down slowly but surely, and that kind of excites investors, because that means long term, or in the mid to long term, they're going to get more bang for their buck as they continue to pump money into the marketplace. So I think we can expect to see a rally in the markets on Tuesday, February 14th. However, it's been very volatile over the last week or so, so it's very prudent to know. We want to see how the market digests the final CPI numbers that come out, and if they are in line with what the expectations are. The severity of the reaction will be what a lot of investors are going to base their decisions on for the remainder of February. Now, as I mentioned before, it's been a pretty volatile week or so, whether it's due to big tech earnings over the last week and a half, and then we had Jerome Powell speak not only at the Federal Market Committee, but also at the Economic Club of Washington over the last 10 days. So we've had a lot of news within the marketplace that's caused a lot of significant churn and volatility. But over on our Discord server, we've been crushing it. We've been able to play the SPY levels and other indices. We made, gave off several alerts concerning big tech, Microsoft, Google, and Amazon are some of our runners that we held. And actually, want to drop this announcement here that we're actually hosting a free open trial for our Discord server from February 10th all the way through February 24th, 2023. So link to the Discord will be in the description of this video as well as in our channel bio. Feel free to stop by and give us a look when you guys get a chance. I've been Trade Runner. This is Trading Analytics. Gave you some insight into what we expect for CPI and how the market will react. Thanks for watching.